Hi, smart investors. Today we're talking about diversification. And I know what you're thinking. That's kind of like investing 101, right? You diversify. You never just put everything into the one pot. That's crazy. Now, what we're going to be talking about is other aspects of diversification that people seem to neglect, not even talk about. It's mind-blowing. Okay, so the problem is that we have too much diversification. So in stock portfolios, you'll find people with 20 different companies in their stock portfolio because they're trying to diversify too much. Now, by diversifying too much, you simply set yourself up to be monitoring too many companies. And if you're monitoring too many companies, then you're probably going to neglect some. This is where problems can start to arise, where things can start to slip in a company, but you won't really notice it until it's too late. That's why within a stock portfolio, you should really only have 6 to 10 different stocks at any one time. Having some additional cash in your stock portfolio will allow you to trade those deals that come up that just work. If you don't have any cash and a great deal comes up on a company you've been watching, you miss out. Also, you want to have at least 1 to 2 index funds in this portfolio as well to also reduce that risk. Now, another thing that most people kind of neglect is income diversification. Now, most people will focus on either a business or a job, and that's it. That's their day and that's their primary skill set, and they'll focus purely on that. And that's kind of what we're good at, right? We'll focus on one or the other, and that's our day to day. Everything else is kind of resting and relaxing and just kind of recovering from those busy days. But income streams are absolutely vital. And while some of us might have some investments here and there that provide dividends coming into us, it's not really a solid income stream, so to speak. So let's have a look at some entrepreneurs, for example. We've got Elon Musk, for example. We all know Elon, and he runs multiple companies, although majority of his money is tied into Tesla just because of its explosion recently and the amount of shares he has in it. But he's still scattered quite diversely. Now, you're probably thinking, well, Jeff Bezos, he focuses solely on Amazon, right? Well, yes and no. He has recently stepped down in his CEO kind of role into other aspects that allow him to diversify himself within the company and continue doing what he loves, and that is creating a company that diversifies itself into various sectors and industries and tries to shake them up in amazing ways. So that is just an aspect of entrepreneurs killing it. Then you have people like influencers. So these are people on Instagram, social media, Facebook, YouTube. They can't risk it all by purely focusing on one stream. Income streams they might set up are, advertising revenue. They might be selling products to get affiliation revenue. They might do click affiliations on ads and things like that as well. Selling books, selling products, you name it. They will create these multiple income streams that produce significant amounts of money for them in the long run because it's substantial and exponentially growing. So that's where they kill it with income diversification. Of course, with greater diversification comes a lot more work and management for every aspect of your diversification. Having too much diversification and not enough diversification is something that you're going to have to work out to find the perfect balance. And that will come down to time and how much effort you want to commit to these various income streams and, of course, your investments. Because, of course, they need to be managed. You can't just set and forget. Sure, index funds and ETFs you can be a little bit more relaxed with, but you do need to manage these things. It's your money, you need to be in control of it, and you need to know what's happening with them on at least a week-to-week basis at minimum. As I mentioned before, with stock portfolio diversification, you're going to want to have no more than 8 to 10 stocks in a stock portfolio with at least 1 or 2 index and ETFs. Break that down again, you're going to want some stocks in your local currency as well as international, which you're probably going to choose US market. If you can expose yourself to other markets as well, but take into consideration, you're going to need to understand that country as a whole of the economy, then the stock market, and then that specific company in that country. So more work. Income diversification we spoke about briefly before as well. Check out entrepreneurs. They are great role models for making different income streams and just molding them to their will. Side hustles are a great way to get started. It's something you can do in your free time. They generally don't take up too much time, and that gets you just a little bit extra money coming in, and who knows, it might turn into something a bit bigger. Let's also not forget about diversifying our investments. Okay, most of us generally stick to stocks or property. It's what we're good at, it's what we know, it's what the whole world just loves to invest in. But there are other asset classes to consider. Could be investing in art, crazy crypto, or crazy NFTs. There's commodities, coins, stamps, a whole heap of niche things out there as well that just might be up your alley and will help diversify your investment portfolio. With diversification being a synonymous word with investing, I hope this video has provided some insight into different ways that you can diversify and kind of bring in your diversification and expand it out to other areas that might be deserving, such as income diversification and asset diversification as well. So I hope you've enjoyed the video, and if you have enjoyed it, hit the like button and hit subscribe. Thanks everyone, I'll see you in the next video. See ya.